When this Indigenous-owned non-alcoholic beer company wanted to expand, it raised $1 million from 580 mostly retail investors through equity crowdfunding.
It's a range of people from a whole bunch of different backgrounds. We got a good handful of First Nations peoples who have signed up to be an owner, which is awesome.
In Australia, there are 15 licensed equity crowdfunding platforms. They run online capital raising campaigns for unlisted startups and small to medium-sized companies. The maximum a business can raise a year is $5 million, but it can come from an unlimited number of investors. If the campaign doesn't reach its target, the money is returned. For as little as $50 and up to a maximum of $10,000, you get a proportional shareholding.
In the old world, raising capital, you're having coffees and meeting people in the real world, but ours is an entirely online process.
Today, I want to ask you to become my business partner.
The hype around equity crowdfunding is growing. An eco-cleaning product brand was able to raise $5 million in 6 hours.
There are a group of investors out there, like the millennials, who are looking for something different.
Last financial year, equity crowdfunding platforms raised $46 million. That's a 125% increase on the 12 months prior. Globally, the industry is worth around $2 billion. The biggest markets are the United Kingdom and America, with Australia ranking 7th. Becky Smallchow is one of 1,600 investors who bought shares in cosmetics company Kester, which raised $2 million.
They're leading in the beauty industry, changing up the way things are done, using business as a force for good. And that's something that both my husband and I really believe in.
I would say 50% invested around $250, and they're literally just customers, loyal followers of the brand.
But is equity crowdfunding a smart way to invest? Well, it's considered riskier than buying shares on the stock market. That's because you're pouring your money into a startup or less established company, which could have a higher failure rate. Your shares will also be more difficult to sell because there's no secondary market to cash them out on, and you could be waiting a lot longer for a return on your investment, if you get one at all.
You need to do your due diligence, do as much research as you can.
And you need to be prepared to lose your investment. Zinger collapsed in 2020, and while the neobank returned its deposits, investors who poured in a total of $5 million were left empty-handed.
I am disappointed. I've lost money, but that's the game.
While acknowledging the risks, those involved in equity crowdfunding say the platform means you don't have to have rich connections to raise cash.
I think it'll be a very inviting platform for many First Nations businesses to be able to get the guidance and the support that they need.
Sober is using the money it raised to build a brewery, triple its production, and plans to deliver a return to investors within 5 years.